Hi, folks. Welcome back to Murthy Finance Academy. Let us start. When you look at a solar panel, you probably see clean energy, right? A simple, elegant solution. But behind that clean, simple image, there's a massive global economic battle being fought. It's a fight for industrial dominance, for profits, and really for control over the future of energy. So today, we're going to pull back that curtain and dive into the hidden economics of the solar industry. For years, we've been told that this is what progress looks like, and the money follows that story. In 2022 alone, the world invested something like $300 billion into solar. That number absolutely dwarfs what went into any other renewable source. This isn't just a trend, it's a fundamental shift in how we power our world.
But here's the twist most people miss. Behind this simple panel is an incredibly concentrated, complex supply chain. It's a chain so dominated by a single country that it forces us to ask a really critical question. As we're all racing toward this green future, are we accidentally building it on the foundation of a global monopoly?
All right, so to really understand this economic battle, we first have to understand the battlefield itself. And that means we need to break down how a solar panel is actually made. It's a fascinating journey that literally starts with sand and ends with a high-tech device that makes electricity. So it all boils down to 4 key steps. First, they take sand and purify it into an ultra-pure material called polysilicon. Second, they melt that down and grow it into these big, perfect crystals called ingots, which then get sliced into paper-thin wafers. Third, and this is the magic part, those wafers get treated and printed to become solar cells. That's what actually turns sunlight into electricity. And finally, you just assemble those cells with glass and a frame, and boom, you have the solar module you see on a roof.
Okay, now this is where the economics get really interesting. See, not all these steps are created equal. That first step, making polysilicon, it costs an absolute fortune to build a plant. But the profit margins are razor thin. It's a brutal, high-volume game where only the biggest can survive. The real money, the good margins, is made in the technologically tricky middle steps, making the wafers and the cells. Assembling the final module is easier and less capital-intensive, and installation is basically a low-margin construction job. The key takeaway here is simple. If you control the middle of this chain, you control the profits.
And on the technology side, there's a hands-down winner. A decade ago, you saw a mix of panel types, but today, the market is almost completely dominated by monocrystalline panels. They're just better. Because they're made from a single, perfect crystal, they create a more efficient highway for electrons to travel, which means more power. They have basically won the tech war, making the old polycrystalline tech obsolete. So we've established we have a high-tech, capital-intensive industry where the profits are all stuck in the middle. The obvious next question is, who owns that profitable middle ground? Well, the answer reveals a level of market control that is, frankly, staggering. Let's just look at the data starting from the very beginning. Polysilicon, the base raw material. Right now, 80% of the entire global supply is produced in China. That's a huge number, but believe it or not, it's just the start. We move to the next critical step, the wafers, and that dominance becomes almost total. A mind-boggling 95% of the world's solar wafers are made in China. This isn't just market leadership. Let's call it what it is. It's a structural chokehold on the entire global industry. And the story continues right into that high-value, profitable sweet spot we talked about, the solar cells themselves. Here, China's share is 85%. So think about what this means. It means if you want to build a solar panel anywhere else in the world, the odds are overwhelming that its most critical components, its heart and soul, came from China. This quote really nails it. 10 years ago, this wasn't the case. You had serious players in Europe and North America. So what happened? A deliberate, long-term strategy of prioritizing market share over short-term profit. Chinese manufacturers scaled up relentlessly and cut costs to the bone until almost everyone else was driven out of the market. The scale is just immense now. We're talking about single Chinese companies that produce more wafers and cells than entire continents combined. That's a monopoly in all but name. Now, when you have that much concentration, it creates a massive strategic vulnerability for any country that wants to control its own energy future. And that vulnerability is now fueling a high-stakes, multi-billion-dollar bet from an emerging challenger, India. And I am not exaggerating when I call it a bet. Just look at the sheer scale of this ambition. In 2023, India had exactly 0 gigawatts of polysilicon capacity. 0. The ambition? To build 38 gigawatts of it by 2026. This isn't just growth. This is attempting to create an entire upstream industry from a complete standstill in just a few years. To get a sense of why this is such a monumental challenge, you have to look at the cost of admission. The price tag to even get in the game and build a competitive, fully integrated solar plant is, well, it's enormous. Yep, that's right. $500 million. That's the minimum investment for just a 1 gigawatt facility that can do everything from polysilicon to the final module. This is a classic economic barrier to entry. It's a game that requires immense capital, and only the largest of the large can even think about playing. And that economic reality explains why you see these names stepping up. These are the industrial heavyweights of India: Reliance, Adani, Tata, JSW. They are the only ones with the balance sheets to place these kinds of billion-dollar bets. For them, it's a perfect storm, a massive business opportunity that aligns perfectly with a top-down national strategic priority. But let's be very clear, these corporate giants aren't acting alone. Their entire strategy, their entire bet, absolutely hinges on government policy. And in the solar industry, policy is a powerful, double-edged sword that can create fortunes or destroy them, sometimes overnight. And this isn't just happening in a vacuum. There is a full-blown global policy race going on. You've got the US pouring hundreds of billions into its domestic industry with the Inflation Reduction Act. Europe is countering with its Net Zero Act. And India is using a combination of tariffs and huge incentive schemes to try and level a very unlevel playing field. India's key weapon here is what's called the PLI, or Production Linked Incentive Scheme. Remember the economic problem we talked about earlier? The massive upfront capital cost and the paper-thin margins, especially upstream? Well, the PLI is designed as a direct answer to that. The government is essentially stepping in to de-risk that huge investment by giving companies a financial bonus for every unit they produce. It's a way to subsidize the economics and make them competitive against the established giants. But this is where you get the policy roller coaster. It's an incredibly delicate balancing act. Let's say you put high tariffs on imported solar cells to protect your new Indian cell factories. Great for them. But what about all the Indian companies that just assemble modules? They rely on those cheap imported cells to stay in business. So in trying to help one part of the value chain, you risk crippling another. One sudden policy shift can create winners and losers all over the place. So that's the setup. We have a dominant incumbent, a very well-funded challenger, and a global policy race that's getting hotter by the day. This story is happening right now, in real time. So if you want to follow along, what are the key signals you should be watching? First, watch polysilicon prices like a hawk. They are the base cost for the entire industry, and if prices crash, it could completely destroy the economics for any new entrant. Second, track India's actual factory output, not just the splashy announcements. Talk is cheap. Third, watch the export numbers. Are Indian companies actually starting to win contracts in the US and Europe? That's a huge signal of success. Fourth, look at R&D spending. Long-term survival isn't just about building factories, it's about innovating. And finally, keep an eye on next-generation technology like perovskites. A major breakthrough there could reset the entire game for everybody. And all of this really brings us to the final, critical question. The next 5 years are going to decide the outcome of this hidden battle. Will these massive bets being placed by India and others succeed in creating a more resilient, more diversified global supply chain? Or will the powerful, undeniable economics of scale ensure that our clean energy future remains, for the most part, made in China? The answer is going to shape not just the energy market, but the entire geopolitical landscape for decades to come. Thanks for tuning in. If you like the video, please like, share, and subscribe. Disclaimer, I am not a SEBI-registered research analyst. All stocks discussed in this video are purely for educational purposes only. Do not consider it as buy or sell recommendation. Do your own research or consult a financial advisor.